All right, get ready to dive deep. Today, it's Warren Buffett,
Yeah.
the Oracle of Omaha. But we're going beyond those headlines.
Right. We're talking the scandals, the juicy stories, how Buffett went from like cigarette butt stocks to a billionaire.
It's wild. Someone who starts selling Coca-Cola as a kid in the Depression ends up a finance titan.
Yeah, those early years shape you. Imagine depression struggles, but your dad's a successful stockbroker, Congressman. That's got to give you a unique view on money, right?
And the drive was there early. Teenager Buffett's devouring investment books, makes a pact to be a millionaire by 30, or else jump off a building.
Thankfully, he made it, 2 years to spare even. Part of that was the cigarette butt investing. Learned that from Benjamin Graham, the value investing guru.
Cigarette butt investing. Sounds kind of scrappy.
It is. Imagine that last puff you can squeeze out. Graham and Buffett, they'd find these companies undervalued, ignored, but with potential for a quick profit.
So real-life examples. Did this actually work?
Sanborn Map Company. Struggling business, but hidden in their books, an investment portfolio worth way more than their stock price.
So he saw value and everyone else saw a dying company.
Exactly. Bought a controlling stake, liquidated that portfolio, walked away richer. Classic cigar butt move. Made his rep.
That's amazing. But we got to talk Berkshire Hathaway. How'd that come in?
Started as another cigarette butt play. Buffett saw potential in this textile company, but then drama. Clashes with the CEO.
Ooh, I knew there had to be some drama somewhere. Tell me more.
It was over a tiny amount, 13 cents a share during a stock buyback. CEO tried to lowball him, and you don't do that to Buffett.
So what did he do?
Went all in, took over, fired the CEO.
Wow. Cold, but I guess that's business sometimes, right?
Shows you something about Buffett, though. This actually changed how he invested. Realized chasing cigarette butts had risks, maybe less reward long-term. That's when the shift happened, looking for high-quality companies instead.
So ditching the quick flips, finding companies to hold on to.
Exactly. Companies with great management, advantages over their competitors, and consistently making money. Went from bargain hunter to empire builder.
Quite the evolution. So after Berkshire Hathaway, did he just start buying anything that looked good?
Might surprise you, he got into insurance. Bought National Indemnity, JIO.
Insurance? That
Yep.
doesn't sound too exciting. Why?
He saw float. It's basically a ton of cash from insurance premiums, and you can invest it.
Okay, float for dummies. How's insurance a cash mountain?
Think of it like this. People pay premiums every month, right? Huge pool of money. But it only gets paid out if something bad happens, car accident, house fire. So between collecting those premiums and paying claims, there's this big chunk of cash just sitting there. That's float, and Buffett, he was a master at using it.
He was using other people's money to get even richer.
Clever.
But didn't he buy other businesses too?
Absolutely. All that float from insurance, powerful tool. He started buying up all sorts of companies. You've got iconic brands, Dairy Queen, Fruit of the Loom, See's Candies, even a railroad, BNSF Railway.
Wow, talk about diversity. I guess this is where Berkshire Hathaway really becomes the giant we know, right? But what made it different from other big companies?
It's the structure. Berkshire Hathaway isn't your typical corporate machine. It's all about giving the companies they own, the subsidiaries, a lot of freedom.
Like, let them run their own show.
Exactly. Buffett's famous for trusting his managers to handle things without interference. It's like how Dumbledore ran Hogwarts, remember? Each house had its own leader, but they were all part of something bigger.
Okay, I can see that. Wasn't there actually a shareholder who made that comparison?
Yeah, at one of their annual meetings, the shareholder was praising Buffett for creating this culture of trust, loyalty, letting each company in the Berkshire Hathaway family succeed while keeping its own identity.
I bet tons of business owners would love to be part of that.
You're right. There's even a story about one who chose to sell to Buffett specifically because he believed Berkshire Hathaway would respect his company's values, treat employees right. That's the kind of reputation he built.
So we've got the early years, the cigarette butt phase, the Berkshire Hathaway takeover, insurance, and how the whole company's structured. What about his overall investment philosophy? What's the secret sauce?
It's all about the long game and value. He went from scavenging for those cigar butts to wanting wonderful companies at fair prices. Think strong management, a real edge over the competition, and clear potential to keep growing.
So not just a quick profit. He wanted companies built to last. Makes sense. Any specific examples?
We've mentioned some already, Geico, American Express, but there's also Coca-Cola, IBM, Wells Fargo, big names, solid foundations.
He really had a knack for picking winners. But how did Berkshire Hathaway actually perform over the years? Was it really that good?
The proof's in the pudding. Their book value, basically their net worth, has grown over 19% per year on average. Way beyond what the market usually does. Shows you what happens when you're disciplined, and you can spot companies with long-term potential.
19% a year. Incredible. Must take a lot of patience to see those kinds of returns.
Absolutely. While everyone else is chasing the latest thing, Buffett's building sustainable value over decades even.
It's inspiring to see that kind of success, built on solid ground, not risky gambles.
That's why people love his story. He's not just a brilliant investor, he's proof that patience, discipline, and understanding how business really works can take you far.
I'm hooked on this deep dive already. We went from Buffett being just the Oracle of Omaha to understanding his whole journey, his strategies, how he built Berkshire Hathaway. But before we wrap up, what are the key takeaways that stand out to you?
For me, it's how his investing changed. Started with those cigarette butts, just looking for undervalued stuff, but then he matured, went for the long term, wanted quality businesses, realized it's not about finding a bargain, it's about companies that will stick around.
And we can't forget how Berkshire Hathaway itself works. It's more like a bunch of businesses working together than some rigid corporate ladder. Buffett gives them freedom, lets those managers lead, builds trust and loyalty.
Right. That hands-off management style is a big reason why they're successful. All these different companies thriving because they can do their own thing. Shows you what happens when you trust people to do what they do best. It really makes you wonder, though, what would Buffett invest in today? With everything we've learned about him, his track record, that long-term focus, what would catch his eye in this crazy market?
It's the million-dollar question, right?
Yeah.
I mean, we know he loves those core things, strong management, a real advantage over competitors, that potential to just keep growing.
Absolutely. But it's not just the numbers, is it? He's always been big on good leaders, a company with a strong culture, that sort of thing. But I also think with all the tech changing so fast, how consumers behave differently, he'd be looking at how companies adapt to all that.
So not just having a great product anymore. Got to be able to move fast, change with the times.
Exactly. And it's funny, he was so hesitant about tech stocks for years, but then, bam, huge investment in Apple.
Yeah, he kind of missed the boat on tech for a while there.
He did, but even he couldn't ignore it forever. The brand loyalty they have, their whole ecosystem, how they just keep adapting to what people want, it shows you he can change his mind when the facts change.
And speaking of changing his mind, it reminds me of that famous quote, "Be fearful when others are greedy, and greedy when others are fearful."
That's Buffett in a nutshell. He's not following the hype, doesn't get rattled by the ups and downs. It's about the fundamentals, doing the research, making smart decisions based on careful thought. That's a lesson for anyone, whether you're a pro investor or just starting out.
So it's not about trying to time the market or chasing the latest trends.
Nope. It's about building a solid portfolio based on good principles and being patient. Let those investments grow over time. I mean, Buffett didn't become Buffett overnight. It took decades of discipline, finding value where other people missed it.
It's pretty amazing when you think about it, all this success, but he's still got that reputation for doing things the right way. You hear so many stories about investors cutting corners, putting profits over people, but Buffett seems different.
He does, doesn't he? People admire his ethics, how he builds value for the long term, how he treats his employees and shareholders right. I think that's why his story is so powerful. He's not just a money guy. He's someone who's figured out how to win without losing sight of what matters.
I think our listener has gotten a really solid picture of Warren Buffett and Berkshire Hathaway today, from just knowing him as the Oracle of Omaha. Now they understand his journey, his strategies, how he built this incredible company.
We've seen him go from those cigarette butt stocks to being all about wonderful companies. We talked about how Berkshire Hathaway works, all that trust in letting people run their own show. And even bigger than that, we've seen that investing doesn't have to be this risky, crazy game. It can be about truly understanding businesses, finding real value, and making smart choices for the long haul.
That's a great point. Now, before we wrap up, I want to leave our listener with something to think about. Knowing what we know about Buffett, his approach, what matters to him, what kind of company would he invest in today? What would he be looking for in this market?
Ooh, that's a good one. It's almost like a challenge, right? Put on your Buffett hat and try to see things through his eyes. And if you come up with any ideas, share them with us on social media. Use the hashtag #DeepDiveBuffett. Who knows? Maybe we'll find the next big thing together.
Maybe our listener will be the one to spot the next Apple before Buffett does.
It could happen. That's what I love about the markets. It's a constant learning experience. There are always new companies popping up, new trends to analyze, and so much to learn.
It's a fun thought experiment, right? What would Buffett do?
Totally. And hey, maybe we'll get some amazing insights from our listeners too.
I'm all for that. Well, I think we've given our listener a fantastic deep dive into the world of Warren Buffett and Berkshire Hathaway today.
We really have, from those early days selling Coke and running pinball machines to building this massive empire. It's quite the story.
It is. And more than just a story. Our listener has learned about his investing strategies, the cigarette butts, the wonderful companies, how Berkshire Hathaway is structured so differently.
And don't forget all that talk about patience, discipline, thinking long term. That stuff anyone can apply, even if you're not managing billions.
Absolutely. So as we wrap things up, I want to thank you for joining me on this journey. It's always fascinating to learn from the best, and Warren Buffett is definitely up there.
Couldn't agree more. Always a pleasure to share these insights and hopefully inspire some folks along the way.
To all our listeners out there, keep diving deep, keep learning, and maybe, just maybe, you'll be the next oracle someday.
Until next time.